And anyone touched by the housing crisis knows the term underwater. It's when you owe more on your home than it's worth. Well, right now, 1 in 4 homes is underwater, which is why more and more homeowners are asking, why should I keep treading water? Why not just stop paying the mortgage and let the bank have my home instead? Well, joining us now from Nashville is personal finance wizard. Oh, he's a wizard, Dave Ramsey. Always good to see you, Dave. 10 million homeowners are drowning, so to speak. They're underwater, which, to clarify again, let's say you have a house that's worth $300,000, but yet you're paying a mortgage of a $400,000 home, which from an economic standpoint does not make sense. So why not just stop making the payments?
Well, you didn't buy a shirt that you didn't like. You didn't buy a blouse that you didn't like. You made a commitment on a contract. You gave your word to pay a bill. If you're able to pay the bill, shut up and pay the bill. Now, if there is a situation where you literally cannot afford it, that's a different situation. You're going to be foreclosed on because mathematically your job used to pay you a lot more. Now it pays you $4,000 and your house payment's $3,600. You're not going to pay that bill mathematically. So then you've got to look at some of these other options. But this idea that we just willy-nilly just walk away from our obligations because this is inconvenient is really bad advice.
Well, and there is a difference. I'm glad you pointed it out, because there are some that they cannot pay. If they could, they would, but they just are financially not able. We're talking about those that are and are deciding to do this. But then they look at businesses. Wasn't it, who was it? It was Morgan Stanley. Recently in San Francisco, they bought like 5 buildings a few years ago, and they just, you know, couldn't make the payments, or they could make the payments, but they didn't make economic sense, so they just said, well, we'll foreclose. Well, let's let it go. Businesses do it.
Well, there's a lot of difference in the way that mortgage is structured. Those commercial loans are what are called non-recourse loans, meaning that the building only stands good for the mortgage. And so Morgan Stanley wasn't going to get sued after foreclosure. If you walk away from your home and you owe, as you said, $400,000, it's worth $300,000. The bank forecloses, then there's $100,000 that they lose after they resell the home. They will sue you for that deficit balance in most states. So they'll collect, garnish you your wages, and force you into bankruptcy. So this has repercussions that are very, very real in most cases.
So let's talk about some alternatives here, Dave.
Well, if you are forced into the corner, the guy we were talking about who can't mathematically, he's hurting. I work with him every day as a financial counselor. Then what you've got to do is you are going to lose the home. So we've got to try to sell it. Now, how do we sell it when we owe more on it than it's worth? Well, that's called a short sale. And that you put it on the market with a realtor, aggressively try to get an offer. Someone comes in to buy it at what it's worth, $300,000 is the offer. We then take that to the mortgage company. They agree to accept that amount because they look at this guy and go, he's broke, we're not getting our money any other way, we're going to have to foreclose anyway, this is a better deal for all of us, and they take the $300,000 and agree not to chase him for the difference. That's a short sale without recourse. A lot different than a foreclosure for the consumer.
How likely is that to happen, not to go after the homeowner?
If you do a short sale without recourse, it's 100%. It's part of the agreement. They're not going to come after you. Now, if you have an FHA loan, they will not chase you for the deficit balance. If you have a VA loan, they'll chase you to the ends of the earth. And if you have a traditional Fannie Mae, you can count on them coming after you, and the private mortgage insurance company coming after you as well. We work with them every day in these situations. And you don't want to be sued for hundreds of thousands of dollars after you got foreclosed on. So go ahead and try to work a short sale ahead of time if there's any possible way. It's much better for you.
Don't walk away. Well, we were a little bit surprised when we saw more and more people are doing that knowingly, and instead of those who simply cannot do it. So there's a difference there. Dave, thank you so much for your insight and your perspective.